Fuck it, I'm gonna expose the exact strategy that has made me millions of dollars in my 20s. I've been day trading for over 11 years now. I've been at top leaderboards of many different prop firms, top 2 at Alpha Futures currently for all-time payouts. I made millions of dollars on my live account. I'm gonna tell you exactly how I trade futures, how I trade NASDAQ, and how I make my money. First of all, I only trade NASDAQ and ES, so that's literally the only tickers I look for. I don't look for anything else. The way I hide my screen is one side NQ and the other side is going to be ES, and this is how I always have it every single day. Now with my strategy, I always start on the larger time frame, the monthly and the weekly. Now I don't look at the monthly and the weekly every single day because there's no need. But what I'm marking out on the higher time frame is to understand direction of price. For example, we see here price has been very bullish on this monthly time frame. So I know that looking for longs overall during the month will give me a bit of an edge because it's been extremely bullish until price reverses, until price tells me otherwise. I want to try to follow the trend as much as possible. Now it doesn't mean I'm long every single day because it's a monthly time frame, but we'll also mark out the monthly high, lows, and close. For example, the previous month I will mark out the high of that month, I will mark out the close of that month, which was, since it was a green candle, it was right here, and I will mark out the low of that month. Then I will mark out any major fair value gaps I see, which in this case would be the one way below down here. Then from the monthly, I will move down to the weekly time frame and essentially do the same thing I just did on the monthly, just refine it on the weekly. And the weekly, again, I will mark out the weekly closes. These tend to be our Sunday also gaps, so we call it previous day or weekly opening gaps. I would mark those out, which in this case, since the weekly close right here, it would be right there. So again, I'm marking the monthly close as well on top of it. And as you can see, this week where we're bouncing on, it's been the monthly close on top of the weekly gap. That little pocket right there, it's giving us a bounce for the week. The low of the week has been right there, as it is a key area to look for. Then of course, I'll mark out my weekly gaps, which in this case would have been right here. Now this weekly gap is not confirmed because it takes 3 candles to make a gap, and we're currently in the 3rd candle. This week hasn't closed, so this weekly gap is not confirmed. But other than that, it would just be the same as the monthly here, the monthly gap we looked at earlier. Then I'll slowly jump down to the daily. The daily is now first time I'm looking at each price on its own, right? Every single day I'll look at the daily. If I do not look at the Asia London session and see what they're doing. The daily, again, much of the same. Daily close, daily opens, any daily fair value gaps, which in this case we don't really have any on this move down, and as well as looking for anything on the daily that it might give me a clue on where price wants to go. Again, here price has still been bullish and it's been pushing up. So telling me looking for longs would have been just more profitable overall. As you can see, we have more green days and red days. So let's say if you just simply long the open and nothing else, you would have made money just because you understood where direction is. And I feel like a lot of traders are missing this key component in their trading, which I like to call the order flow. Where is order flow? Where is the direction? Who is in control of the markets? In this case, bulls have been in control. Last 2 days are ripping. Even today, it's slightly a red day currently. As you can see, it's not a strong red day. Then every single day, I will jump in the charts intraday and looking at the 4 hours and 1 hours candles and look for pre-market lows, pre-market highs, any equal highs or equal lows. For example, here price closed here. So this would be my pre-market low, because that's where the 6 p.m. open on the hourly. And this would be my pre-market high, which happened at 4 in the morning. And I will use them for targets for the market to head towards. Like today we had a 9:30, we had the open. And on the 15-minute when I jumped in, I said, hey, the open looks a little bit bearish. The reason why we had a 15-minute bearish gap right here, the price did not test. We had the pre-market low that we could target. There's not any key levels on this move up, and we could have easily targeted this. Now, when I'm jumping in the intraday, I'm also going to be looking at ES. So we'll have ES and NQ side by side, and I will look for what we call divergences in the market. For example, here we saw this candle, which is a big clue to go off to short off the open today, to give that short off the open because we're looking for a divergence. You can see this candle here wicked all the way up here. So it took out this previous candle highs. You see here, this candle high, it took out all of this low liquidity sitting there. It took out all of this. Well, if you look at the NQ was weaker, NQ did not take out those highs. This is what we call a bearish divergence. So this is giving me a clue that price more than likely wants to head lower. Then I will jump to the 5 minute and I will look for my entries on the 5 minute, the 1 minute, and those type of time frames. And then I'm using the larger time frame targets, like we talked about this pre-market low right here, as a target for that price. So what I'm doing that's really important is I'm combining all the time frames together to one, come up where should be my target for the day, where should price most likely head towards. You're not going to be right 100% of the time, but it's understanding where to put the odds in your favor. So understand, hey, price most likely wants to go to 524 because it's a pre-market low. So I should have a short bias for the day. I should look for a pullback. I should look for a pullback into that. Now it's up to the 5 minute and the 1 minute to help me look for those entries. The entries you could have found, like I just showed you right now, you got a bearish divergence right off the open with all those highs getting taken. You had a 50-minute gap above you that you had rejected from around the 7:30. And right when we open up, right 9:28, right here, you created a 1 minute bearish gap. See how I'm doing time frame alignment. I'm starting from the higher and working my way down. The 1 minute right open rejected from it, so you can enter on any of these candles rejection. And hey, if you missed that entry, you could have found another entry right here. Right, you're following order flow. Look at order flow price. All the bearish fair value gaps getting rejected, while the bullish levels are not being respected. If you go over here on these bullish levels, price is not caring for them. Price is just slicing through them. They're not very strong. This is telling you the price right now, order flow is not bullish. It's bearish. So you should be sticking to the shorts. You should be looking for the shorts, and you should look for those continuation lower as well as your targets. Now, if we go back and we down to the 4 hours and the dailies and the weeklies, then we also have, hey, we have potential targets for price to retrace. We understand even a bullish trend can't just go up all the time. It will need retracements. So the retracements are going to be into your 4-hour lows and gaps. So here, so they have this 4-hour gap with a low there. Price more than likely wants to do this, and we're going to continue going higher. That's what more than likely price wants to do, correct? So that means that I can take shorts, understand the larger time frames, the macros are still bullish, but even the macros need to pull backs into it. Now, when I'm looking for confluences on the 5 minute and the 1 minute, these are usually the ones I look for. It's going to be a bearish or bullish gap, just like I showed you guys. It's going to be an SMT divergence, like I showed you guys. It's going to be my golden pocket tool. So this tool right here, anytime I would like price to retrace between the 0.5 and then the GP, the 0.66 and the 0.618. So whenever I get a retracement into that, I can continue following the trend. What I'm trying to do is I'm not trying to catch each top and bottom. What I'm trying to do is understand where price is most unlikely heading towards and how can I catch a piece of that move, minimizing my risk with a good win rate. That's all I'm looking to do. We all know in the gym, people ego lift, right? Like, do you want to put a bunch of weight? Should I'm the strongest guy in the gym? A lot of people do that with trading. They're over here saying, hey, I need to catch this top. I need to catch the exact bottom to exit. But in reality, what you need to do is catch a piece of the move. And if you consistently enough catch a small piece of each move every single day, and the big home run wins will come, then you'll do great. You'll make a ton of money. Remove the ego out of it. Now, when it comes to my stop losses, usually I try to aim for the last structure shift for my stop loss. So for example, if I had entered short off this 1 minute gap, we'll jump to the 1 minute. If I'm entering short off this 1 minute gap and I'm entering confirmation, so when price hits the 0.5 of that and it rejects, I enter short here. What I'm looking for is more likely stopping out if we get a candle closure above the gap. So I will target, let's say this is my target, and I will look for a trade like this. Now, it's important that you are waiting for a candle close above the gap. Keep this saying in mind, wicks do the damage, but candles bodies tell the story. So a lot of times you might wick above it and then close back into it and continue to trend. You get wicked out and then you get upset because you missed on a trade. Also, what I like to do a lot is another thing you should write down: short above highs and long below lows. So as you can see here, if I'm going bearish here, if I want to take these shorts here, what I'm doing is I'm shorting above this highs. I'm waiting for this highs to get taken and then I'm shorting. What I'm not doing is I'm not shorting here. I'm not shorting the lows because this gives me a bad RR. You see here, second drawdown, even though this worked. This gives me better RR, and it's just not the way I trade. We know that price is seeking liquidity, so these internal liquidity areas like this want to be taken out to grab that money, bring that cash, bring that order flow, and start driving it down. So it's something that I do, and even when if I'm long, I'm gonna wait for a low to be taken out, then enter the confirmation and trade the long. This is something that saved me millions and millions of dollars, I swear. A lot of people don't understand this simple concept. Price needs liquidity to head towards a level, so a previous low or previous high will be taken. Also, a lot of traders, what they're doing, they're setting, like they'll set, for example, they'll set something like this as their stop loss. Let's say they're short from here. Let me remove all these drawings. They're short from here. They'll set this as their stop loss. They'll set, hey, my stop loss is this high. So they'll short, say they're short here or something. They set the high as their stop loss, and they get stopped out. And the reason they're getting stopped out is they're not understanding the simple concept that price wants to take out the previous low liquidity lows and highs and then continue the trend. Because it needs money, it needs buyers that are getting stopped out. It needs those stop loss to get triggered to then head towards the direction. This is a breakdown of how I trade, from my top-down analysis to the Confluences I look, and how guys, I keep it really simple. Like I'm telling you, this does not sound anything crazy. The more simple and efficient you can keep your trading, the better you will do in your trading. If you learn from me directly and work with me one-on-one, see how I can help you scale to $10,000 a month in 90 days or less, just click that first link down below to work with me directly.